The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will, and today we're going to discuss the all-important S&P 500. The S&P 500 is crucial, vital, because most of our everyone with a retirement account, they're pretty much invested in the S&P 500. We don't have that many choices, so it comes down to managing this one chart. And if you're new here, I am a technical purist, technical analysis purist. Okay, fundamental analysis is I show it much disrespect, but it has its place, but it's definitely secondary to technical analysis. As long as you get that part right, you and I are cool. But if you don't, if you think technical analysis is irrelevant, come on over here. Let's talk about that. Okay, I got some fire for you. You know, for confusing the people. You know, at the end of the day, no matter what happens, the news doesn't matter. Nothing matters but the price. If you can't read the price on the price chart, then you're really at the mercy of the matrix. The news establishment. The CEO or whoever's doing the earnings release for the corporation. So what you're really at the mercy of the propaganda. But once you learn how to read the price chart, you're free. You're free of that. Price is truth. At the end of the day, no matter what people believe, no matter what they think and how they feel, at the end of the day, they got to come to go in their brokerage account and they have to press the buy or sell button. And in the technical world, we live by the saying, price is truth. Price is truth. We don't care why you did what you did, what your reason was. We know that collectively we can look at a price chart and see the real-time collective sentiment of the market. Period. And today we're looking at the S&P 500 because we want to retire or we want to hold on to what we got. And a lot of trading really is holding on to what you got. And so let me go out, just give you the bigger perspective. Like this video, share this video. As you see, I don't have a whole lot of videos, but I think you guys need to take a look back at some of my videos in the past and bring up a stock chart of when I posted the video, and you can see over time, you've been getting some pretty good guidance over here. You're looking at the this is the S&P 500 going back to this particular date that starts in 1970. Oh, this is a good one. It's 1970. Okay, this is great. So you see, markets tend to trend a long time. So going up is the rule, pretty much. The downtrends are the exceptions, but the exceptions are important enough to recognize because it does great damage. Let's see. This point in time, 1987, February. And the high, let's go to this point before it started falling, was year 2000. And so, what did I say this was? 78. So that's, dang, that's 22 years. Okay. Wait a minute. My odds are going bad. Gone bad. Trying to see this. 1997. Okay. So this took 13 years. Okay. But the correction, we call this correction. Why? Because in the larger picture, the trend is still up. But you're talking about in 2 years' time, it destroyed gain that took 13 years to make. Okay. And that's why we don't hodl. We technical purists don't promote the idea that you should just, that nobody knows when the top is. What the hell does that statement mean? Does that mean that we don't know the exact penny? Or does that mean that nobody knows nothing? No, you don't know anything. Technical analysis has been around for over 100 years. Okay, one of the quote unquote fathers, at least in the Western world, is Charles Dow, the Dow Jones Industrial Index. So if that should make it reputable to you. Okay, it's not a fly by night thing. If anybody that's I don't care if they're our accountant, a financial advisor, I don't care if they speak of technical analysis with disrespect, run. Don't even listen to them. Don't even listen to them. Technical analysis is part of it's part of the test. It's on the test that you take to get a to get a license, SEC license. It's not fly by night. So a first test is if your financial advisor is someone reputable, is if they tell you the technical analysis is hocus pocus, mumbo jumbo, or they speak of it with disrespect, run. Because that person, I don't care if they're certified, whatever, that person will not protect you from this. They don't know enough. They don't know enough to protect you from this. So I'm over here talking boldly and, pretty aggressively because I know they don't want that smoke. Okay. Now, I told you in my opening statement, get a financial advisor. So I'm not against professional guidance, certified professional guidance. I'm telling you that they're not all equal. Okay? Because I hear some of them out here speaking against technical analysis. I started trading a long time ago. Despite this youthful voice, I am 58 years old. And I have been trading since I can't even do the math, since I was 23. So that's a long time in the game. I'm trying to do the math. Was that 35 years? And most of that time, I would say up to around 2007-ish, I started the transition to I would say I really started trading under the guidance of technical analysis. And around that time, it was a slow period of transitioning from the matrix. Okay, the common way people tell you that they do things, which is via fundamental analysis. So I think, when was that? So with 23, that would have made me around, I can't do this math, around 86 or 7, somewhere in there. So we're talking about a good 13 years of fundamental analysis. So I was in that camp. And I know that's bullshit. It's bullshit. It really is. No, I can't respect it. I can't respect it totally. But it does have a place if you use it to help you determine the best stock within an industry or sector. You know. But nowadays, most people are buying ETFs, which is what I do. So that doesn't even matter. You know, James Cramer calls ETFs weapons of mass destruction. You know, weapons of mass destruction. Because ETF is a basket of stocks. A mutual fund is a basket of stocks too. The principal difference, the functional difference, is when you buy a mutual fund, the 4 p.m. price that day, that's the price you get. If when you sell a mutual fund, the 4 p.m. price that day, you press the sell button, that's the price you get. With the ETF, you can buy and sell it intraday, just like a stock. So if you turn on your TV and you see the market going to hell, if you have a mutual fund, there's nothing you can do about it. You can press the sell button, but it's not going to get executed till the end of the day. If you own an ETF instead, you can press the button and be out, just like, you know, you can contribute to the dumpster fire, you know. So that's the main difference. But the reason why James Cramer called them weapons of mass destruction is because when you sell that ETF, and the same goes for mutual fund, but, you know, because the ETF is traded intraday, your emotions can, you know, people can react emotionally and sell. When you sell that ETF, that entire basket gets sold. And most of the volume nowadays is via ETF. So since most of the volume is via ETF, what do you need with fundamental analysis? So unless you really want to buy Tesla and Netflix and like individual names, say you don't want the whole NASDAQ, you just want to go with, to say, 4 or 5 of the real winners and you don't want to mess with the others. And like, why buy since most of the NASDAQ is Apple and Facebook and Netflix and Google, why do you need with the other stuff, you know? But my answer to that is, hell, they got an ETF called FANG, which does that for you. So I don't know. But let me get back on track, back to it. We got this long chart of the S&P 500, and the point I was making is that this 2-year decline wiped out 13 years of gain. Okay, and you didn't break even until here. Here is 2007. So if you hodled, if you listened to conventional wisdom, that's an oxymoron. Anyway, no, conventional wisdom. I guess it seems contradictory. It's not wise, or it's presumptuous. Maybe that's what I want to say. That convention is wise. Okay. That's debatable. We do stupid stuff as people. We do stupid stuff for a long time. All right. Okay, so this is 2000 right here. If you had listened to, quote, conventional wisdom, it said nobody knows nothing. Nobody knows the top. You can't time the market. No, you can't time the market. You can't time the market. Just hodl, just buy. And you took this dump for 2 years, which wiped out 13 years of gain. You would have gotten a profit, flat. And then I'll give you credit for this. 2007. So you're talking 7 years. Now, this is what educated people tell you is intelligent. Meanwhile, and they lie to you by inference. They infer to you that this is what smart people do. The richest people in the world do not do this. Okay? Big money rules this market. And this up and down price action you're seeing is the response of big money. So big money was selling here. Big money was buying here. Big money was getting richer because they were shorting it as it went down. Big money got richer because they gained as it went up. And they told you to hodl because nobody knows nothing. You can't time it. Looks to me like the rich folks knew it pretty well how to do it. You were poor here and they were rich. And you were poor here and they got richer. And you keep listening to conventional wisdom. Technical analysis, we assume that people lie. People lie. We watch what people do, not what they say. And the charts is what people do. If you want to learn how to read this, join my Patreon. It's too cheap not to be there. It's too affordable not to be there. If you're not on my Patreon, you deserve to be broke. Yeah, I'm sorry. You get good game there. I ain't mean to do this. I don't need this. You're getting real good game there. And you'll learn how to do this yourself. And so what I'm showing here is a gross oversimplification of what I go deeper into on the Patreon. I'm an Elliott wave theory trader. I teach price action, candlestick formation, Elliott wave theory, because it's all really kind of baked in the Elliott wave theory. So we got this super long run here, and we all of the investing or trading world, we're all trying to get the end of this big cycle. It started like in 1970 or late 60s. And we're trying to get the end of this thing. And in Elliott wave terms, we would call this a wave 4. Now it's not exact. This is not. I don't want to lead anybody to think that if you learn technical analysis that you're going to be perfect. No, you're going to lose some money too. You're going to lose less money. You're going to make more money than the people who don't use technical analysis. And the better you get at it, the more money you'll make and the less money you'll lose. So in Elliott wave theory, we count these squiggles mean something. Okay. The originator of Elliott wave theory, his name is Ralph Nelson Elliott, way back, I think in the 30s or 40s, I think. He counted the squiggles and he saw a pattern. He saw a movement of price, which on various instruments that showed a pattern. It's like a pack behavior with people. And prices repeat these patterns over and over and over. It's phenomenal. We don't know why it happens, but it does. It seems like we got some collective sense of when something is over, it has run, its price has gone too high. And we sell. We don't know why that happens, but we're so much pack animals that it's like mathematically consistent. It's spooky. And this concept is ruling Wall Street, but no one will tell you that. Because why would they? The game is designed for them to win and you to lose. But when you learn this, now you're cut in, But you have to be taught this. You really do. Don't try to learn it on your own. You'll waste too much money and waste too much time, lose too much money. All right. So this right here, all this looks like a wave 1, a 2. This looks like a 3, a big 4. So the danger thing that everybody's talking about, a major correction in the stock market, because this looks like a 5 in progress. It's not over. It's not over. And you see this nice little channel here, this nice little structure, and that's what everybody's waiting on. This thing to break, and it is going to break soon. It's not the end of the world when it breaks. It's not hell yet. Okay, not the end of the trend yet, But we're almost completing a 5-wave structure in here. And when we do, we'll have a bigger downturn, which will likely come in this area. And then that's not over. And then we go higher still. And at that last push higher, north of this area where we are now, then we're gonna talk. Then I'll be making fear porn videos. Okay, because then we'll have a completion of a new structure that started in March of 2020, and that would appear to complete the whole structure that started in 1970. So those fear porn videos you hear a lot of people talking about, this is what they I need to rephrase that you hear the technical people talk about. This is what they're looking at. They're looking at partially what they're looking at. It gets worse. They're going back really all the way back to, to the Great Depression era decline. Again, because from this Elliott wave theory perspective, these squiggles, mathematically, they have meaning. Okay? Because we're talking about the intersection of sociology and mathematics. Okay? It gets deep, but I can't go there here. You got to get on the Patreon for that. It's a whole nother thing. Yeah. I mean, I hope y'all realize that people pay thousands of dollars for this knowledge. I mean, thousands. Some people pay up to $30,000 for somebody to teach them the trade. They're good people on YouTube, very, very good sites, charging $500 to $2,000. And unfortunately, I can't say that you get what you pay for. It really, really doesn't work out that way. There's some great YouTubers with it's like recognized game. A good trader can tell another good trader. And I can see the principles that they teach, and there are people selling good courses out here for $500, or $2,000. And then there are people that's teaching crap, that's selling or not. Let me not say crap. That's over. That's exaggerated. That they're selling you something that's no better than the $500 course that somebody's selling you. It's just that their webpage is slicker, and so you paying for all that overhead. They charge you $10,000, or they wear a nicer suit. You're paying for all that, but the smokes, it sells. The sizzle sells. All right. So anyway, let me come down and get on with this, and so what we got here is, of course, we got a 5-wave structure. Elliott wave theory is about, these waves within waves things. Okay, so we got a very key one here. This is the last move up, okay, that we're looking for. And to me, to my opinion, and to my eye, without going too deep in it, just keeping it really, really basic in grade school, we broke this support. Okay, a support is like a price floor that trends respect. Okay, a resistance is like a ceiling, a price ceiling that trends respect. This is a daily chart. This candle is from today, so we just broke support today. All right. I wouldn't be surprised if we, came back up and tested it and fell. But in general, the basic idea is we have what's called a wave 4. We got a wave 1, 2, 3. We got a wave 4, which should come down to this area. Well, the beach ball, the Mac beach ball. So we got this area and this area. This is like a natural support where people psychologically, because there's a lot of psychology in trading. Okay, our emotions is tied up into our money and where we buy. So people that buy at these certain price points, and big money, the whales, they noticed these areas where this area here was a ceiling before, and then it broke above it here, and this red candle here confirmed that the old ceiling became the new floor. All right. So price was going up. As uptrends do, they make higher highs. No, so that means you got to take out the old high. So this down move happened, and there's some Elliott wave stuff in here that tells us, when how to get that, how to get in, in this area. All right, but that's for Patreon. All right, but the price, broke this prior high. Red candle came down to confirm that the prior ceiling is the current floor, and away we go. But we're going to have a 1, 2, 3. We're going to respect this area. We're going to come down near this area, but this area should hold. General area should hold at the floor, and then we're going to finish the 5 counts. So it's 1, 2, 3, 4, 5 going higher. I get more specific stuff about how high and where exactly, and I'm speaking euphemistically, exactly, but in the general area where it's likely to end, and we count the waves along the way, and so we got people in technical analysis and Elliott wave theory and what I teach on Patreon. It can be used for long term to help you manage your retirement account. It can be, if some people trade just like they might hold something for 3 months, 6 months. Some people hold a trade for a couple of weeks or a couple of days. Some people trade intraday. Those are day traders. The theory, the teachings is the same. It's up to you how you want to apply it, because these wave cycles are cyclical. They happen. Cycles happen inside of cycles. Okay. It's like your lifetime is within the lifetime of your parents, typically. All right. You're a mini them. Okay, and they got these smaller cycles inside the bigger cycles, and the baby cycles look like their parents. Okay, so they're like self-similar. That's like some elementary, breaking it down as easy as I can, some Elliott wave stuff. Okay, and so we count these cycles, and more than count the cycles, we trade the cycles. And so understanding the cycles tells you when to get in and when to get out. So how to make the money and how to keep the money. Okay. So it's up to you to determine what type of trader you want to be. But that's what I'm saying. I'm saying right now we got for this, I don't know, a couple of days, maybe a week. We probably after Thanksgiving, I would say the first week of December, we might be done with all of this. And we're gonna squiggle. We're gonna make a little zigzag like this. Made a little zigzag. We're gonna make a little zigzag, and it's gonna be over. Then the market going to continue going up. One more swing, and then we're gonna have, like I said, that more serious. Come on, my computer is. Maybe I should update my software. It's telling me right there, update. Then we're gonna break this trend line. Okay. And then when we break this trend line, we'll see how far this comes. So, we got an area here where it might respect it. And of course we got, come on. And of course we got this area. So we got some stopping points along the way where I do not think that this major correction that's going to happen later that's not going to be the end of the world either. It's going to feel like it, because you very well could end up taking out everything back. You could take out a whole year of gain. It could wipe out. It's likely to wipe out all of your gains in 2021, and it could happen in as short a period as 1 month. So just as before I showed you, it took 2 years to wipe out 13 years of gain. It might only take 3 or 4 weeks to wipe out 1 year. And so that's another reason why you need to know technical analysis, because when you miss that, you just reset the clock. All that work to get the price up, and then in 3 or 4 weeks it wipes it out. And so technical analysis puts time on your side, because without technical analysis, with just hodling, with just thinking nobody knows nothing, you're hustling backwards. You're hustling backwards. So get that good game. But also another thing I want to throw about how the pros, the big money managers, again, they run things. Okay, it's they're the whales. We just a tick on their ass. So that's all. And so technical analysis, we whale watch. We watch the flow of money. We try to catch a ride or catch a wave that they're creating. Okay, and so these oscillators and these squiggles, they mean something because big money is creating it, and so it tells us what they're doing. We don't know who they are, and we don't really care. We don't know exactly why they're selling, and we don't care. And we don't know why they're buying. We don't care. We only care that they're buying and that they're selling. Okay, and prices get what we call overbought. The price runs up too high for a given period, and it has to have a pullback, a pause. Okay, and so big money, they are traders. Okay, they're not just holding on forever. They're traders, and they're telling you that you're too stupid to learn how to trade. And you have financial advisors basically telling you that you're too stupid to learn to trade. Let that sink in. You got big money trading every day, and they tell you that you can't do it. You're not smart enough to do it. You have some learning deficiency that you can't learn to do it. Don't even try. And y'all accept that shit. You give them money to tell you this ignorant shit. All right, let me calm down. Anyway. All right. Okay, so we're going to have a retrace. Then we're going to have this next wave. And in my opinion, again, there's my opinion, and there's what the charts say. We talk about the future. That price hasn't happened yet, okay? In my opinion, when we come here, they're going to try to stretch this run out to get through the month of December, because they don't want to pay taxes. They don't want to pay taxes on all this money. Where is January? Yeah, I got to reset this computer. January. Okay. This area here is the start of yeah, right in here is where year 2021 started. Okay. They're gonna keep this market positive because they don't want to give that money back. Oh, not give it back, but they don't want to pay taxes on it in April 15th of 2022. If they're gonna make this market trend, this particular what we call wave 3 in Elliott wave parlance, this trend we're in is wave 3. In Elliott, if the market or wave 3 ends on January 1st, the taxes on this gain, the tax on this gain isn't due until April of 2023. Okay, so that's a big deal. So why pay taxes now when you can pay taxes later? So they're going to push this thing out into January. But when January comes, we're going to be looking at this bigger decline. And and of course on my Patreon, we count all of these little squiggles all the way through, and we talk about ways to make money on it. And there's so many ways. We got on my camp. I got Forex traders. Me and several other folks are Forex and futures traders. We got crypto traders. This works on everything for day trading, the long term and quote unquote investment, from crypto to futures and forex. They got an options trader that's on the channel. It lists several options traders, but mostly it's stocks, crypto, forex. That's probably most of it. But it's up to you. I can't tell you who you are, but I can show you this tool or this technique of technical analysis, and you can use it and be whatever kind of trader or investor you want to be. Because we're all using the same concepts. Okay, and automation runs a lot of it, and automation is programmed with these concepts that I teach on Patreon. Okay, so some of you are already coders and programmers. When you learn these concepts, now you're really cooking with gasoline, because you can then start making trading bots. That's my next step. I'm going to learn to do a trading bot. Let me stop and say hello to everybody. What's up, Sean? What's up, She? We here, Sean Carter. You still doing videos, bro? you almost as bad as me. I went on vacation too from YouTube, man. I mean, I'm trading for real, y'all. I'm a real trader. Okay. I mean, this is what I do for a living. So I can't, YouTube. I would love to grow my channel, and I need y'all to help me. I've been on here a long time. My daggone subscriber count is so low, it breaks my heart. It's embarrassing for me to look at. I turned it off, not so y'all don't see it, but so I don't see it. Okay, so I need y'all to share this channel, give it to your best friend, but most of all, I need y'all to protect yourself from these markets by joining my Patreon. It is a shamefully low price. Click the link at the top and see. What's up, Black Curls? What's up, Walt Diesel? Black Curl said, explain that. I might have touched the nerve. I'll be kind. If it's something you wanna hop on and talk about, we can. I'm a respectful person. But I can substantiate my arguments. So I am an Aries, so that means we are strategically bold. People think that we just fire off the handle. No, we're trying to provoke other people to be emotional. They call us emotional, but we can think rationally while we're emotional. We know them while we're emotional. We know most other people can't. So we like to agitate folks to get them angry, because that's when they start telling the truth. That's when the defenses come down and they start saying stuff, right? They make it plain in ways that if you don't knock them off their center, they'll lie to you for hours. You just shorten the conversation. Go on and poke the hell out of them and make them say the truth, and then you can have a real conversation. What's up, Walt Diesel? You say they need to join. Oh, there you go. That's right, Walt. Kwaku Isasi, what's up, brother? Glad to have you. That's a new name. I'm glad you're here. I want to dig a little deeper. And so now we got the chart analysis down. Let's look at the top 100 stocks, because I like to do this, especially like in critical runs, because we can't catch everything. I like to, like I said, we look to see where the money it flowed. Who's winning? This is just one quick and dirty way. I do a sector analysis too, and I'll get into that on Patreon, because money rotates to sectors. Okay. And inside of sectors, you have industries. So industries are in sectors. So like let's say tech would be a sector. And then within tech, you got different industries. And then within those industries, you got individual companies or stocks. So money rotates to sectors and industries, not to stocks. So that's one piece of free game right there. So they got y'all all wrong and confused in the matrix, thinking that money rotates from stock to stock. No, money rotates from sector to sector, or to industries and stocks within sectors. Okay, there's a time to buy one particular type of sector, and there's a time to buy another type, and that money rotates from one sector to another. It doesn't leave the market. Generally speaking, it doesn't. It might. Ain't no might. Some of it does go to treasuries in certain situations. But the lion's share of it just rotates to another sector, you know, or a lot of it. I don't want to get it. Let me just say a lot of it just rotates to a different sector. And the beautiful thing about technical analysis is you can show all this in charts, which that'll have to be another video, and that's a longer thing. But I just wanted to know in this big run of the in this run. Oh, I can't be switching like this. That's right, because my thing is slow. And a big run like this, who made the money? you know, we're approaching December, so it's simple now on these screens on my favorite site, bar chart. Second favorite. My favorite might have to be Investopedia. It's great education on that site. Okay, if I had to credit one site for teaching me, guiding my, I'm not one, and I learned on many sources, but the one site that I would credit over all of them would be Investopedia. I used to watch the people talk on, finance on TV, and I had a pad and a pencil, and pad and pen. This is, before computers, I mean, before they really kicked off, took over everything. We still had the discipline of writing things down. Now I don't write anything down. I go to a computer and write it. But I would write down every word or phrase they said that I didn't understand. And I go to Investopedia and look it up. And they write it in a way in Investopedia that that I can understand it. It was like, wow, they wrote this for me. Somebody who don't have a damn clue. They wrote this for me. And so that was a good spot. So put that in your bookmark, that Investopedia. So we have a list of top 100 stocks on bar chart. All right, and this one here is called. Let me sort by 52 weeks. Let's see. This is like a year ago today. All right. I could do it on the main view. You can also go here to the performance. It's gonna be the same, not much different. But it will show you year to date, meaning year to date is January 1 till today, and 52 weeks is 52 weeks ago. Today relative to 52 weeks ago. All right. See who won. Because okay, this is Destination XL Group. This is like a big and tall store for men, a chain. Let me rephrase that. A collection of stores. Let's go here. Oh, dang, they took it out. I gotta go the long way. I'm going for profile. They used to have the quick link there. Come on, bar chart, trying to let me down with that move. I gotta do this extra click now. You come over here and look for profile. And they can tell you what kind of business this company is in. Okay, it's retail, clothing, apparel, shoes. It's in the top 100 stocks where we were just looking. Destination XL Group is a multi-channel specialty retailer of big and tall men's apparel with operations throughout the United States, Canada, and Europe. These are places where folks got money. It operates under 6 brands: Destination XL, Casual Male, Rochester Clothing. Way back when y'all used to go to the mall, where malls used to be popping. I'm sure y'all remember all this. B&T Factory Direct. Oh, you may have seen some of these places. Shoes XL. There you go. So you get it. You get it all. That's what they basically do. Headquartered in Massachusetts. Okay, I didn't know that. All right. Let's take a look at the chart. The XL Group. Of course, I already looked at it, but I'll share it. Because this is what I do. I like to look and see who made the money. Because, can't rely on news and folks to tell me where I should be. Now, Again, let me slow down. We just looked at a picture of the S&P 500, and it's in a correction mode of sorts. And so I'm already biased to expect this thing to likely be in correction too. But I wouldn't just trade off of that quote air quotes logic. I would go and confirm it on the charts. So I would expect to see some weakness. And what do I see? This is today. Look at that. It's in a correction. Okay, big decline. Then Elliott wave theory, y'all folks on my channel, y'all should know what this is. Okay, so we're likely going a little below this, or somewhat below this, in one sense. And I expect this chart in the near term to trade like the it seems just visually, it seems structurally, the price structure seems similar to the S&P 500. I'm expecting this thing to come down a little. It may even encroach on this a little bit. Come not much, not come down here just a little, and then resume the trend up. One more push, one more, maybe, not too high, maybe about here or something, not that high, around $10. Okay, but and then a bigger correction, just like the S&P, but this one may be even worse. Let me show you the monthly. What's going on with this thing? Okay, way back when, in 1993, this thing was $25. And an Elliott wave pattern, we call this an ABC corrective pattern. All right. Now, this thing took from 1990, and this low here is lower than this one. Okay, just so everybody know, this is the lowest point on this whole ABC correction. We call this an ABC correction. Okay. It gets deeper than that, goes into how to measure it and all that stuff. You got to get on Patreon for that. All right. Again, people charging hundreds to thousands for this stuff. Okay, I'm charging pennies. Okay, but give me my damn pennies. All right. So we had this nice run. We broke this price ceiling, this trend line resistance. We broke through it. I think we're gonna have a pullback and retest this line and get one more push up. Oh, I'm sorry. Let me correct that. And resume the trend higher. Okay. I think after this correction, I think we're going to attack this area. But for now, it looks like we're after we finish that minor push up I was looking at on the smaller chart, we're gonna have a pretty severe, a pretty steep correction. Maybe this area. About we'll see. But again, on in Elliott wave theory, we count the waves as it's making the moves. So this is very fuzzy logic right now. Okay, but as the price starts drawing in, well, we're already out of the trade. We're not losing money while it's doing this. But we have a way to project and count and measure as it's making the decline to determine to recognize the bottom as it happens. So counting it gives us the projection of where it's likely to end, and then we watch the real price action, the real money come in and make the thing turn around, and then we know, okay, this according to the theory and according to the fact that the price is now broken some key levels, the bull market is back on. Okay, so this thing was 21 cents. This low here was $1.85 in December of 2020. So almost 12 months from now, almost a year ago, essentially 11 months ago, this thing was 21 cents or 18 cents, 18 cents. And it's going to have a correction. I mean, we might get it. We might be able to get it, for $4 or something like that. We'll see. We'll see, you know. But what's happening next is this is under attack, $25. That's a good run. That's a good run. So even when we miss it, Elliott wave theory and technical analysis shows us how we can get back in on something that we missed. It might come down lower. Maybe it comes down to this level of $2. But again, we count. It's the way that we count it as it moves, and all these rough projections get tightened up as the price actually, as the structure comes in. Because again, there's certain predictable things that price does. Okay, and you can learn that. All right. All right. And so this goes on a watch list. All right. And the other things that have been trading well through the year, in the top 100 stocks. For me, I would go to an ETF, but because I know a lot of people like individual stocks, I'll chart and talk about it. But this group destination is obviously in the retail sector. So, I think one of them is RTL. Let me see. Is that it? It's a zillion of them. Retail. That's one. But there you go. I'm gonna go risky. This is risky. This is a leveraged ETF, meaning they go into the daggone options market and trading options to goose up the returns on this thing. Now, it's very, very risky. I don't recommend this unless you're really, really a trader. But you get 3 times the growth of the whole retail sector. So, again, money moves to industries and sectors and industries, and then to stocks within the industry. So when I saw that Destination XL group was a retail stock, I said, well, then let me take a look at the and sure enough, look at what you see right here. Pow! This low was in February of 2020, and this is a view of this ETF, which tracks the entire retail space. Okay, $2.73 to $50. Okay, so I don't buy individual stocks. It's just my style. I know who I am as a trader. I don't care if the CEO dies or if the CFO steals money, or I don't want to get caught up in none of that company specific stuff. I just buy these weapons of mass destruction, as Kramer calls them, these retail stocks. And if you want to know, how else, what they hold, what this ETF invests in, you check constituents. But none of this helps you if you don't know how to read a damn price chart. Okay. But I'm looking at that run. This damn thing went from $2 or something to $50. Whoa. So yeah, I want to be there when this thing retraces, because now I know in this wave, this final push up in wave 3, that the money rotated. And I can do deeper research, but just from on the surface, it seems that the retail sector, they made the money in terms of stock price appreciation. And so you can, you would look at all the stocks that this one ETF holds. So by buying this one symbol, you're buying Abercrombie and Fitch, all this stuff. Advanced, I don't know what the hell. Oh, retail, even auto retail. Damn, okay. Amazon, this is the main retailer. Eagle Outfitter. So y'all recognize these names, okay? So, I ain't got that kind of time to be picking up. Now, fundamental analysis, here's where fundamental analysis is great now. It will tell you which one of these stocks got a real business behind it. You know, they make the real money. It's not hopeism. They got a real business, sound business, you know, that they're doing. And so if you want to feel safe that you're not investing in some sham company that, you know, is not going to make the earnings and freak people out. But the bottom line is it all goes up. The tide raises all boats, okay? And the other side of that is sinks all ships too. So on the way up, the rising tide raises all boats in that industry, okay? What's good for the industry is good for that stock. So bullshit companies, their stocks go up too. That's why these penny stocks rise and other things rise, because the tide raises all boats. Now, on the downturn, if you're a hodler and you buying a bullshit company, that company might go bankrupt. Because it can't survive that downturn. They don't have the financial resources and stuff to weather a storm, you know. But I'm free from all of that. I just pick a ETF and concentrate on reading the charts and you know, like wet your finger, stick your finger in the air and see which way the wind is blowing. Okay, it's blowing this way. All right, it looks like it's gonna be good for this industry. Okay, let me hop in this industry, buy this ETF. And when that ETF, when that whole industry space starts to look via the chart of this symbol, when that whole space starts to look like it's running out of gas, I run like hell. I'm out. And so I participate in what Kramer calls the weapon of mass destruction. I press the sell button and contribute to destroying the stock price of all this shit. All of it. Bye. I ain't the Lord don't live here no more. Bye. I'm out. All right. I ain't loyal. All right. So what we got here? We got time to go to work. Okay. What's happening? What's happening, Carl McFarland? All right. All right. So let me see. Let me switch over to this. I'm about to wind this down. I said pretty much what I came here to say. You know, spread this. Okay. Show this. So I don't know. Oh, he said true shit. Okay. Man, this thing got. I'm on here cursing, right? And Jerome Venable writes true shit, and the system held up. You know, wouldn't print what he said because he said the word shit. I'm over here cursing, right? Because my thing is definitely checked. That this is not for kids, all right? Yeah, what's up, Kwaku? Yeah. BGS mentioned me before. Yeah, I'm from I would say BGS is responsible. Two people directly for me being on YouTube at all. For me writing in a comment section on YouTube, I give BGS credit for even making me write in a comment section to a YouTube video, let alone getting on a panel, let alone talking about stock trading. Okay, because I go way back to the Coliseum days. Okay, with Angry Man, and the second person I'll credit. I give Angry Man credit because he pissed me off. He challenged me in the Coliseum. He's like, dude, you on here talking all this damn stock shit, and you ain't got nothing on your channel. I was mad. I'm like, who this motherfucker gonna tell me that? But I'm like, he's right. He's right. So, you know, Aries to Aries, I ain't like that shit. I ain't like that. But he was right. So then, you know, BGS used to kick it on the stocks. And he's good. I could tell that he has traded intensely before. He knew more than the average person. I could tell that. But he admitted that he was a little rusty because he didn't do it all the time. And so I said, well, let me help. And what he was saying was right. What he was trying to show on the charts was right. I said, well, let me jump in because I'm in the weeds on this shit. So I said, let me just jump in and help him out and flesh it out. What he was trying to show, and then that kind of grew. And in the Coliseum, we just, we would take a small section around midnight, and we kick it on the economics a little bit and start, talking about, the flow of money this whole industry movement of money and the major correction, the reset, all this stuff. We would talk about all that stuff, and that evolved to the creation of the Black Brain Trust and my channel. So yeah, so I would give you definitely heard of me through BGS. So I definitely I was not moved really by nothing on YouTube. I used to watch. I go back to the beginning of YouTube. But when I heard that collective, back with we talking again, BGS, Angry Man, Cerulean, I'm like, wow, these sound. I mean, this sounds like the select few brothers that that I kick it with when we get into like deep debates like this. And I found what would later be called the Black Manosphere. So yeah, we go way back. All right, but anybody got any questions, anything in the chat? Type it fast. I'm gonna give you about 1 minute, and then I'm gonna get on out of here. You know, I said 1 minute. I lied. About 15 more seconds. Type. Going once, going twice, going 3 times. Nope. All right, fam. I'm out. Peace.